Sundeep, just tell us who the LPs are and what they're excited about you allocating towards.
Hi, Caroline. It's wonderful to be here. It's a very exciting week for us. We've raised 900 million, our largest fund yet, from mostly U.S. institutions that we're super proud to take money from. And these are hospital systems, museums, university endowments that are all doing like great things in the world. And we're proud to be in business with them, and we're proud to like multiply their money and have it go back to some great causes.
I'm just really interested, Sundeep, more broadly in where you therefore put the money. Because at the moment, it sounds as though you're going to be in generative AI more full throttle. It's going to be the infrastructure layer, but that feels like a very busy, very crowded space. Who are the companies you're depending on?
Yeah, I mean, just to give, take a step back here, Felicis was actually born in 2010s. Our very first institutional fund was just at the beginning of the cloud and the mobile tech supercycle. And we've been very fortunate that we found some like amazing businesses as part of that. Household names today like a Shopify, Adyen, a Canva, and a Notion. And so we're now at another exciting tech supercycle in AI, just in the first or second innings, if you will. And so there's a lot of excitement in the past 2 years. 2/3 of our investments have been AI native companies. Most of our investments are like usually first or second money in. So we're playing very much into the AI supercycle. Household names, hopefully like the Canvas of the world, 10 years from now that go public, plus both the infrastructure stack as well as the application stack.
It's interesting. We had Menlo Ventures partner on yesterday, and Sean was telling us that in certain areas, the funding just seems extraordinary. The valuations, once again, almost feel akin to 2021. Is that what's happening right now? How are you getting in at a decent price point?
Yeah, look, I think valuations, continue to be market driven in many ways, and we're not the only ones excited about AI. But if you take a step back, the reason why everybody's excited about AI is that even like if you look at like the broad arc of tech history, what tech is really good at is providing us products and services that are previously expensive or like inaccessible, except to like a very few, and bringing it all the way down, democratizing that, to the masses, if you will. And, a great examples of these in the last tech cycle were companies like Canva that allowed anybody to design. Now over 200 million people use Canva to design. You have something like a Shopify. Anybody can become an entrepreneur, and millions have become entrepreneurs because of Shopify. An Uber gave us all private driver, and Airbnb gave us all a vacation rental. And so, you take that forward and you think about like what AI can do for us. It's, every household. I mean, think about how many times we keep talking about, I wish I had like a private tutor for my kids. I wish I had, a therapist. Like, and they're so expensive. Every session is expensive. They're hard to find. Think about all of the labor that kind of goes into household services. Or if you move that to businesses, you have things that are available to senior management, like an executive assistant or an executive coach, that are not available to everybody else. And AI is expanding the surface of software so drastically. And if you think about this, Caroline, just 1 to 2% of world GDP currently spent on software. And AI is so radically restructuring the surface area of software. And you can be an AI pessimist or optimist, and those numbers in 10 years are going to be different for each one of us. But none of us are going to disagree that that number is going to move up drastically.
Sundeep, very briefly, like you have had some superb exits, and think of Shopify and Adyen, and you are in some of the hottest names when I think about Runway and indeed Canva. How much pressure have you seen from LPs being like, look, we need the liquidity now? How quickly do you think these doors can remain open, briefly?
I think, for the very best companies, think about a Canva, like their shares can trade every single day. They don't have to even raise any primary money. They've been so profitable for so long that in the secondary markets, you always have the ability to exit if you want. And we've selectively chosen that for our LPs and given them back like some distribution. And so we've done that like on many other funds have done that. So I'm not worried about that. I think bigger things to think about is that given this new AI tech cycle, if you assume that the software as a percentage of GDP doubles, let's say conservatively, that's hundreds of billions of dollars of new spend that is going to get allocated to new products and services that are AI. Our job is to basically go and find those outlier businesses for our LPs and find the next Shopify and Canva and Adyen, before they're obvious.